Hello everyone, welcome to today's webinar, Navigating the Shift from Legacy to Strategic Services to Realize Sustained Business Growth. I'm Justin Surgeon and I'll be hosting today's session. But today's webinar will be presented by TBR Senior Telecom Analyst Chris Antlitz. In today's webinar, we'll share insights found in our Enterprise Operator Benchmark. If you'd like to learn more about this report, please reach out to myself or Chris after the presentation. Now before we begin, there are a few items I'd like to cover. First, I will be recording today's session and posting it on our YouTube channel, TBRI channel. I encourage you to visit this channel to view this presentation or any of the previous presentations we've posted. Second, I will be following up with all of you via email tomorrow afternoon with the link to today's recording as well as with the slides from today's presentation. And finally, we welcome questions on the material we're presenting today. Please send any questions you have to the Q&A function and we will address as many as we can at the end of the presentation. And with that, I'd like to hand this over to Chris.
Thanks, Justin, and welcome everyone. So my name is Chris. I'm a senior analyst in the telecom practice here at TBR, covering the operators and the vendors on a global basis. Today we're going to be focusing on the enterprise operators specifically, and what some of the strategies are of the tier ones, and how their performance has been shaking out, particularly with regards to the first half of this year. And also be sharing some insights about where we see some of these operators trending, how some of these major buzzword topics like SDN and NFV, cloud, IoT all play into their strategies going forward, and how we see that impacting their businesses in the broader ecosystem. Before we start with the material, I do want to give a high-level overview of what our coverage is here within the telecom practice at TBR. So, as I mentioned, we cover the telecom vendors and the operators in depth on a global basis, where we will look at a variety of subsegments within that. So you'll notice towards the bottom right-hand corner of this chart, we have enterprise operator bubble. And then off of that, we have carrier cloud, which is another research stream that we do that deep dives into the carrier cloud businesses of these enterprise operators. We also cover other major technology areas within the space, including 5G, small cells, NFV, SDN, and Wi-Fi, among others. So just a little bit of background on the material that I'll be presenting. This is from the Enterprise Operator Benchmark. This is a semi-annual benchmark report that my group puts out. And you can see down at the bottom of this slide, we have the cadence for the other products that are within this research stream. So we have the Enterprise Operator Benchmark. Then we also do Carrier Cloud Benchmark, where we will isolate the cloud portions of the enterprise operators' businesses and do a deep dive on that. We do deep dive modeling and analysis of what's going on specifically with regards to cloud. We also have a carrier cloud market forecast, which looks at the total addressable market that these enterprise operators are playing in for their cloud services. So these are all tie-in together, all these different reports, and they're all looking squarely at the enterprise operator businesses on a global basis. So with that, we'll jump right into the material here. These are the key findings and some of the outputs from the most recent Enterprise Operator Benchmark, which we will be discussing. So essentially what's going on here is when you add up all of the business results from we're covering the top 10 Tier 1 enterprise operators in this particular report. And when we aggregated all the numbers, what we noticed is that the businesses have been shrinking in aggregate for several quarters. And when you dig deeper into why that's happening, there's a couple of things that come to the forefront. First and foremost, and I don't want to underestimate the impact of this, is the currency, adverse currency. When we do the modeling for this, it's all converted into US dollars so that we do an apples-to-apples growth comparison. So the currency impact was acute, particularly for the European operators, because the euro had weakened substantially against the US dollar. The other glaringly obvious thing that jumped out to us is that the legacy services are falling at a much faster rate than the strategic services are growing. And it's not a surprise to anyone, I'm sure, that legacy is in decline. However, the key point here is that strategic services, these new technologies that the operators are embracing and investing in and actively deploying, are not at the scale yet to offset the steep decline that we continue to see taking place in legacy. And we're going to talk more about strategic services in particular and where some of these tier ones are placing their bets and who's being successful and who is not. The second thing that we saw is that carriers are expanding their IT services portfolios to improve revenue growth. So from our taxonomy, IT services we consider a strategic service, and this will include primarily data center related investments, so it ties in cloud there. Also, there is a professional services aspect to this. There is also the M2M/IoT, which is all included in there as well. So the data center investments, we see that continuing to take place. Carriers are focusing their capex on data center build-outs and data center interconnect, and that is primarily to support their cloud businesses and to provide global scale for their large enterprise customers in particular. We're also seeing more emphasis on fiber deployments, rolling out fiber directly to the premise for their large enterprise customers, and we're now starting to see more emphasis on rolling fiber out to the medium-sized businesses and in some cases small businesses, if the economics make sense. Depends on the proximity from the fiber plant, and it also depends on a number of other factors if the carriers are willing to make that investment. I do want to point out AT&T with their Project VIP. That role in that program, which was initiated in 2012, was a 3-year investment program. One of the key investment areas within that program was rolling out fiber directly to their business customers' premises. And I believe they ended with 1 million net new fiber rollouts directly to their customers' offices. And that, it's just a testament and underscores how important fiber is becoming, upgrading the copper plant, putting fiber into the ground, and scaling up the access services that they're providing to those customers. Tying in cloud, which is very important that there's low latency when the cloud services are being delivered. The enterprise customers want to have low latency because, especially if they're putting mission-critical workloads into the cloud, there needs to be fiber in the ground that is providing that connectivity so that there is a good quality of service coming into the enterprise offices. So these are some of the major trends that we're seeing when we did the number roll-up and looked at what all the operators are doing from a strategy perspective. So we're going to unpack that a little more as we go through these slides. Here we're looking at enterprise operator positioning. So we have the top 10 Tier 1 enterprise operators plotted on this 2x2. On the y-axis, we have differentiation and technical capability. So essentially what that is portfolio, breadth and depth, as well as capability for doing next-generation services. How nimble are they? How successful are they being with some of these new services? And then from a business performance and capability standpoint, what do the results show? Is their revenue growing? Are they getting traction with customers in some of these new areas? Are they softening the blow to their legacy business? And we're taking all of those variables under consideration, and then we plotted these operators out. And what jumps out to us is that NTT and AT&T are standout outperformers here. AT&T and NTT have the largest, most diverse, and they have the most depth and breadth to their enterprise operator portfolios. and they are getting traction in key areas, particularly on NTT's end. They're getting strong traction in their cloud business. On AT&T's end, they're getting strong traction in their IoT/M2M business. And then we have other operators here. Verizon is doing, has mixed results. And then we have the European operators are lagging in some respects in the cloud end of the business, and also they are getting hit especially hard in their legacy businesses. Pricing is coming down, and they are struggling more so than other operators to offset that impact. So looking at total revenue and growth, here we've got the top 10 Tier 1 enterprise operators plotted. The bubble shows relative total revenue, size, and then the y-axis is year-to-year growth. I do want to say from a taxonomy perspective, these numbers include total, it includes all revenue derived from enterprise and SMB customers within that operator. Okay, so this is an all-in numbers that we're talking about here. It's not just large enterprise, even though they are the largest component of the revenue share. SMB is also included in these numbers. And we did that to provide a more holistic view of what the business environment in aggregate is doing. So what stands out here, again, AT&T and NTT are the outperformers. They have the largest businesses here. There were some acquisitions in the space. Level 3 purchased TW Telecom, which enhanced their long-haul and metro transport business. They also got some other assets from that acquisition. That gave Level 3 a bump in the quarter. And you'll notice that Telefonica, Orange, and T-Systems had a tough quarter. That's mostly due to currency and also the impact of lower pricing on their legacy businesses. And then there were mixed results from Vodafone and CenturyLink. CenturyLink's having trouble monetizing their cloud business. Their co-location business pricing is becoming commoditized, and they are struggling to compete against other companies in that space. And that is playing out in their inability to grow that business. And then again, mixed success from BT and Verizon as well for similar reasons. So it bears noting acquisitions and alliances in this space. They're very important, and they also give an indicator of where these operators are trending, where they're heading, and what they want to be. So let's just start at the top left, Telefonica by GVT. That acquisition is helping Telefonica expand their fiber network in their core Brazil country. So this plays into that theme of fiber deployment, embedding more fiber into their footprint. And NTT buying eShelter, which is enhancing their data centers in the European countries. This plays into NTT's goal of becoming, well, they already are, a large-scale cloud provider to global enterprise. NTT is playing up their global reach and the quality of the service that they're able to provide with the connectivity as well as the cloud solutions that they're provisioning out of their data centers. Level 3 with Black Lotus, this is a play on security. Security is extremely important for enterprise customers in particular. They need to feel secure and confident that the operators they're relying on are protecting their data that's being transmitted through their pipes. And I expect to see much more acquisitions in the security space by these enterprise operators to provide that level of comfort with their customers. And then we have Orange buying Ocean. This plays into the IoT strategy. This particular example is for telematics, and there have been a string of M2M related acquisitions. Vodafone has also acquired some companies in the past few years. This all plays into the fact that IoT is going to be big. It's not huge yet, but it has so much potential and the ecosystem is just at the very early stages of developing. These operators are positioning now to make sure that they don't get left behind on the IoT space. They don't want the value to go to OTT players. They want to be the ones that are providing the smart services as well as the connectivity platform to these, for these IoT solutions. Moving on to alliances, which are also extremely important here, particularly for operators that might not have the financial flexibility to do acquisitions, or the acquisition is just not as important to warrant a outright acquisition. They'll engage in an alliance. So looking at some of these, we have BT partnering with CA Technologies, again playing into the security. I want to emphasize security because it's so important here. There's going to be, I see a land grab. There's going to be acquisitions of smaller players. There's also going to be a variety of alliances taking place on the security end. It's very necessary here for that, having that level of confidence in the solutions that these operators are providing. NTT partnering with General Electric, and they're collaborating to develop IoT solutions for the utilities industry, things like smart metering, smart grid type things. Expect to see more of that. With Verizon and Deloitte, again, security. And then with Telefonica and Alcatel-Lucent, there's a partnership here for implementing NFV and SDN. Now, by no means is this comprehensive, the 4 alliances we have here. There have been a significant amount of other alliances that have also been announced in the first half of 2015. These are just some of the ones we're pointing out and showing where the operators are placing their bets and where they're trending, where they're heading, where they want to be. Okay, so looking at revenue and revenue volume across the major lines of business, I think this is an interesting distribution. Looking at where is the sheer dollars coming from when we normalize the lines of business across these enterprise operators. And when we look at IT services, this really drives most of the volume for these businesses. I do want to highlight that Dimension Data, which is owned by NTT Corporation, is included in the IT services revenue, and that's why it's a big bump. Dimension Data does IT services for enterprise customers, and there's a heavy emphasis on connectivity that is weaved into those solutions. Therefore, it is relevant to this benchmark. And then I want to also highlight here strategic data and strategic voice versus the legacy voice and the legacy data. Notice that the strategic data and strategic voice are bigger in absolute terms compared to the legacy volumes. However, they're not growing at a faster rate than the legacy services are declining. So that's where we get that, that drag on the aggregate numbers. And then wholesale transport revenue has also been declining as carriage rates fall. We are seeing some customers of these operators deciding to invest in their own long-haul transport and metro optical transport, doing their own data center interconnections and bypassing the carriers. I want to just highlight Google, Amazon, and Facebook. Those 3 customers in particular are investing directly in their own optical transport infrastructure because they believe that these are strategic assets for the interconnection of their data centers, as well as providing services, in Amazon's case, AWS services directly to their largest customers to ensure low latency and high quality of service. This is bypassing their traditional connectivity providers. So in Amazon's case, they would have historically carried that traffic through an AT&T partner. Now what we're seeing is they're starting to take on more and more of the traffic through their own pipes that they're investing their own capex into, and they're bypassing the traditional carriers. This is a trend that we're seeing with the web scale customers, and it's also playing out on the pricing of the carrying the traffic for the traditional carriers. And then looking at that aggregate revenue by the major regions, you'll notice that the Americas drives the majority of the volume on the enterprise operator space. This makes sense because most of the Fortune 500 companies are based in the U.S. and they have most of their resources based in the U.S., so this makes sense. However, I do want to make a note that we are seeing growth in APAC, particularly in cloud. We are seeing large enterprise in that region being more apt to migrate their workloads into the cloud, particularly mission critical, and that is spurring growth in that area of the world. EMEA has been a mixed bag. Europe, there's pockets of growth in certain countries, but generally speaking, EMEA has been a tepid market with flat growth, flat to slightly declining growth. So I just want to characterize each of the regions. Americas, we have flat to slightly positive growth is the trend. We have APAC is growing, and then we have EMEA, which is flat with a downward bias. That's how we're seeing the growth playing out from a regional perspective. Okay, so what are the key takeaways here? What are the heavy-hitting, salient points I want everybody to walk away with here? And I just want to come back to the ideas of the weakness in legacy, the growth platforms, how SDN and NFV plays into all this. I just want to touch on each of those in isolation. So the first point here, enterprise operators investing in growth platforms, trying to boost growth of strategic services and outpace the decline in legacy. So what are we seeing from a high-level view? Investments are taking place in fiber access. It's taking place in IoT solutioning, which is heavy on M2M, industrial M2M. And those are the main growth drivers that we see, the next stage of growth for these enterprise operators. The next point here is that consolidation is likely, and it's going to be driven by cost pressures, so the need for synergies, the need to show some growth, and the need to get a jump start and get some scale in some of these strategic service areas, namely fiber access, cloud, IoT, and security. So I want to point back to the Telefónica's acquisition of GVT, which plays into the fiber access play. And then we've had CenturyLink make a raft of acquisitions in prior years in the cloud space. We've also had Level 3 purchase TW Telecom, which also plays into the fiber portion of the business, but that's more of a fiber transport, so long-haul and short-haul optical transport side of the business. And then we've had a variety of security-related acquisitions. So we expect more acquisitions to take place. The operators want scale. They want to have more of the value chain in the strategic service areas. So what do I mean by that? I mean in areas like IoT, in security, they want to own the platforms, okay? They want to have the value in the stack where they can build a scalable business off of that and have some economic moat that gives them some competitive advantage over the smaller operators. Okay, so the third point here, NFV and SDN, I do want to highlight this and talk a little bit more about it because it's so important and critical for the long-term futures of these operators. They are using SDN and NFV first and foremost to reduce OPEX and CAPEX spend and gain a time-to-market advantage. So AT&T is probably the best example I can provide right now, given where they're at in their migration. I was actually just at the AT&T Analyst event a few weeks ago, and they demonstrated some of their what they're doing on their path to becoming a software-defined operator. They not only talked about what they're doing from an internal perspective, they also talked about what they're doing from a customer-facing perspective. And it was very interesting to see how disruptive this migration to software-mediated technologies is actually going to be for the operators and for the vendors. because there's going to be a direct impact on the vendor population from the use of these technologies. And so what we see is NFV and SDN, there's going to be increased emphasis on these technologies. We're going to see the operators working more closely with the vendors. Of the 10 operators that are in this benchmark, most of them are at some stage of implementing SDN and NFV. Most of those are moving from the lab into commercial production. So they're moving on these technologies. And the operators, generally speaking, especially within the CTO organization, they see the need to do this. They see the need, and they see that the risks outweigh the benefits of implementing these technologies. And then lastly here, we're seeing some of these operators becoming more consulting-led and focusing on selling solutions. And this is a very different go-to-market approach than what we've seen in the past, which was more focused on selling point products and services. So I'm going to come back to AT&T just because they're top of mind from me coming back from the analyst event. AT&T, what really struck me about what they're doing within the enterprise space is that they're becoming more consulting-led. And their customers are pushing them to be more consulting-led. So what I was hearing there, and with some of the demonstrations they were showing there, is that these large enterprises, they hear about IoT, they hear that it can help them improve their productivity, optimize their the way that they interpret the data, and it has all these benefits that they can leverage and tap into. The problem is that in many cases these enterprises are not tech savvy. So they are relying on their technology partners to be thought leaders here and to help them architect these solutions so that they can get the full benefit of implementing these IoT solutions. So what we're seeing AT&T morphing into is being more consulting-led and being more proactive with their customers instead of reactive. Now, both of that is still happening, but they are seeing a real need to invest in their consulting assets and be more proactive with their customers to push the envelope of technology and demonstrate for these customers what can we really do with M2M technologies, with some of these other IoT type technologies. So some examples for AT&T is what they're doing with connected car, showing the auto manufacturers what they can do with the data, how they can improve the user experience, how they themselves can leverage the data for optimizing maintenance, routine maintenance type functions. And there's a raft of other applications here that can be used to help the auto manufacturers better monetize the people who are buying their products. Okay, so with that, we are going to open it up for Q&A.
All right, just a reminder, please send any of your questions to the Q&A function, preferably not the chat function, just because it's easier for us to read on our end here. And with that, let's get to what we have in so far. So, all right, first question, when are we going to see IoT businesses scale? Okay, so that's a good question. Scale is a relative term. So scale to me, if you look at what some of the vendors have trumpeted, about 50 billion connected devices coming onto the networks by 2020, that's scale. Okay, right now we are at a very small fraction of what the full potential of IoT is. Are the businesses for the major carriers scaling? Yes, they are scaling. But they have so much runway to go, and the opportunities are seemingly infinite right now. So we're at the very early innings. I do want to note that
carriers will typically provide insights into how many connections are coming onto the network. Just be very careful when you are looking at their numbers to not take them at face value, because in many cases the carriers will include things like wearables and tablets in those numbers. So they're not pure M2M type applications. So like when I think IoT, I'm thinking the big scale is going to come from the industrial IoT, where you have millions upon millions of sensors interacting with other sensors and feeding data back to the enterprise, which is where they're doing analytics on that data and then optimizing their workflows and, you know, optimizing their go-to-market approach, et cetera, et cetera. That's where the big scale is going to come from. It's not going to come from selling a few million more tablets. So when you parse the data back, there is a tremendous amount more scale that is going to come from industrial IoT in particular.
All right. Another question came in. What verticals are enterprise operators focusing on for IoT/M2M?
So we're seeing most of the verticals are being addressed by some by the operator population. Some of the verticals that we see more emphasis being placed on is energy and utilities. Healthcare, to some extent. Healthcare is tricky because of the regulation around it and the government's involvement in it. But some operators are focused on it, like AT&T. And then we have transportation is another big one. And within transportation, that includes the auto manufacturers as well as fleet management companies, as well as shipping companies, logistics type companies like a UPS, FedEx, or a Maersk. And those are the main verticals that I can think of off the top of my head. The other ones are more fringe verticals, so retail, manufacturing. Those ones are more, there is opportunities there, but we're not seeing very focused, targeted go-to-market towards specifically those verticals as we are the other ones. So we got a question on the chat function here. What is the maturity of SD-WAN? So I'm assuming that SD is software-defined WAN, and the maturity of it. I don't have a response off the top of my head. I'm going to have to follow up on that one. So we have another question here. Industrial IoT should be attended by Wi-Fi, which is free. Does this mean that the IoT will not provide too much revenue to enterprise operators? So, okay, so this is a great question because, yes, the Wi-Fi is going to play a role here. However, when you're talking industrial IoT, in most cases, you're talking about mission-critical or you're talking about connections that need a high degree of coverage and low latency and just an overall high quality of service, okay? Cellular provides that. Wi-Fi has shortcomings there. Okay, Wi-Fi is great for, you know, carrying traffic as an offload, but when you need a company, so let's take an example here. Maersk has a deal with AT&T. AT&T has outfitted 290,000 of Maersk's shipping containers worldwide with tracking devices. Okay, so they're tracking each of those containers worldwide for the company. You can't use Wi-Fi for an implementation like that. It's just not possible. You need to leverage the power of the cellular network and the pervasive coverage that it has, as well as it's more secure. It has more pervasive coverage. It has lower latency. It has an overall better quality of service. This is what the large enterprise customers want when they are engaging and trying to implement these IoT solutions.
All right, looks like I can only see one last question here. Is SDN and NFV predominantly going to be used for cost reduction, or do you see revenue generation opportunities?
Can you say that louder so everybody can hear it?
Yeah. Excuse me. Is SDN and NFV predominantly going to be used for cost reduction, or do you see revenue generation opportunities here too?
Yes, so the operators are expecting, the primary reason for implementing SDN and NFV is for cost reduction. Now that is for capex and OPEX reduction. So that's the primary goal of the use of those technologies, and that's where they expect to get the biggest bang for their buck in implementing those technologies and taking the risk to do the migration. However, there is also operators that are viewing SDN and NFV for revenue generation opportunities. So I want to come back to AT&T again because they're the furthest ahead in this aspect. They have an offering called Network on Demand. And I got to see this firsthand when I went down to their headquarters a few weeks ago. They did a demonstration, and I was very impressed with that service. Basically what they did is they virtualized a couple of routers from Juniper, Cisco, and Brocade, and they provisioned the workloads from those virtual routers on a commodity CPE unit, and were doing running the workloads from the cloud. So this is a key example of using SDN and NFV technologies as well as cloud as a delivery mechanism to offer a highly dynamic and flexible service offering to the end user where they can scale up and down their usage as they need it. It's basically a usage-based approach for the customers where they can increase bandwidth or decrease bandwidth depending on what their needs are within their offices.
All right, well that looks like that's all we have for questions, so I'd like to thank Chris for taking your time presenting this today, and thank you everyone for stopping in and listening. You can follow Chris as well as TBR on the Twitter handles listed here, and also listed are all our social media accounts, so please check out our YouTube page for previously aired webinars and our SlideShare page for the decks. Additionally, before you sign off, I'd like to ask you to take a quick survey on what we presented today, as we're always looking to improve both the information we provide and how we provide it to you. So we'll leave the chat function open for another minute or so for people to ask any last-minute questions. Otherwise, thanks for attending and have a great afternoon.